Hello, my name is Steve Bigelow with the Candlestick Forum. We're going to kind of go back to why it is important to know how to read candlestick charts. Because right now, as we can see in this market downtrend, if you listen to the talking heads on all the TV commentary stations, you've got so many different opinions, supposedly from experts, that tell you, well, you should be buying some here, or we're getting close to the bottom, or no, it's still got more downside. There are so many different analyses that if you listen to all these experts, you still wouldn't know what to do. However, when you're looking at a candlestick chart and you can see the patterns setting up, the indications of what investor sentiment is likely to do, like on a bearish J-hook pattern, and you're below the T line, which is just an extremely high probability trend indicator, you now have much more control of what your investment decisions are versus wanting to do or having to listen to any of the so-called experts. Same scenario on the NASDAQ. As long as you're trading below the T line, the probability factor is extremely strong that you're still in a downtrend. The fact that every time they come back up, they can't stay above the T line or they can't get to the T line is that much more evidence that the bearish factors are still in control. So this week, we want to take a look at a couple of the sectors. The gold and silver stocks are acting well. Both gold and silver are starting to move up, and the semiconductors still in a very strong downtrend. So take a look at some of these. Here's a list of the gold and silver stocks that are starting these upward trend direction again. So obviously you want to watch to see what happens at levels that everybody else is watching. And the semiconductors, kind of the same scenario. You got bearish J-hook patterns and now setting up a new bearish J-hook pattern. So take a look at your semiconductor sector as shorts. Also, there's 5 basic indicators that tell you with pretty good evidence of which direction markets are moving. The biggies like Apple, Amazon, Tesla, NVIDIA. Those are all the ones that everybody's trading and everybody's watching. So when you can analyze that Apple is still selling off, look at our bearish trend kicker signal. Look how it broke this little support level, looking like wave 1, wave 2, wave 3, still in a downward direction. So even if you're not trading Apple, you can still use it as an indicator to tell you this market is still weak if they're still selling off the biggies. So in every market, you're always going to have some good bullish trades. Manu is a left-right combo. That's one of your strongest candlestick reversal signals. Confirmed at the 50-day moving average, which everybody is watching, and a close above the T line. This becomes an extremely high probability trade if it starts opening positive, because now your next target is probably coming back up into this price trend area. This also allows you to know where you should be back out of this trade if this signal isn't working. It shouldn't close back below the T line. But the 2+2 analysis is analyzing what the overall market direction is. If the market is trading bearish, why go against the probabilities? Pick out the trades that are doing, again, strong evidence of bearish candlestick signals and patterns. This is a bearish trend kicker signal, one of your strongest reversal signals. But if you've got a signal that also can be identified forming a pattern, that just improves your probabilities that there's still a lot more downside in HGV. bearish J-hook pattern on FOCS. Another indication, and these are the observations that we put out for people to that tell you that where the improved probabilities are coming about. Notice how on Friday, FOCS came right up and hit the T-line and then sold off, creating a bearish J-hook pattern. The fact that it hit the T-line is significant, not in the sense that it hit the T-line. You got to remember, nobody has the T-line on their charts. We've identified it over the last decade and a half as being one of your strong Fibonacci characteristic. It acts like a natural support and resistance level of human nature. So when you have this evidence or this, I want to say, indicator as far as part of your trading arsenal, you dramatically improve your probabilities for high entry trade setups. But if this opened lower on Monday, you can be shorting it because it's confirming the selling and the failure of the T-line. So right now, it is much easier to analyze trends when you can read candlestick charts, knowing what the candlestick signals reveal, what the patterns reveal, and what the T-line rule is. So with that, stay predominantly short. We'll see you in the chat rooms.